Hello and welcome to this session in which we would look at issuing report and communicating the results in a review engagement. In the prior session, specifically, we looked at the unmodified conclusion as part of communicating the results. Now, keep in mind, this lecture is a part of the series for the review engagement, starting from establishing understanding with the client to issuing the results. So make sure you viewed at least the unmodified conclusion, because the modified conclusion will be a continuation of the unmodified conclusion. So I want to make sure you're aware of this. So in this session, we will discuss when do we issue a modified conclusion, what would the report looks like. We'll work a multiple choice question at the end of this recording. Let's go ahead and get started. Before we proceed any further, I have a public announcement about my company, farhatlectures.com.
Hello, my name is Farhat. You are here because you are either an accounting student, a finance student, or someone who's studying for their CMA or CPA exam. Great. You are looking for some additional help, and we can help you. I strongly encourage you to visit my website, farhatlectures.com. I offer additional lectures, resources, including PowerPoint slides, multiple choice questions, in some circumstances, exercises, and true-false questions. Our material is aligned with your CPA review courses, with your CMA review courses, with your college courses. I offer a risk-free trial that you can try to find out whether my website can help you or not. If you find it helpful, you subscribe, you keep your subscription. If not, you cancel, and your risk is free. If you like this recording, if you like my lectures, you would like what's on the website, give me a chance to help you with your college courses as well as professional certification. I hope to see you on the website.
So, modified conclusion in a review report. If the accountant determined that the financial statements are materially misstated, then we need to issue a modified conclusion in that report. Now, we have two types of modified conclusion. It all depends on the misstatement. It all depends on the severity of the misstatement. If the type of the modification depend whether the issue is material but limited. So it's a major issue, but that major issue is limited to one particular area. Then we issue a qualified opinion. If the issue, the misstatement, is both material, so one is material, two, pervasive. Pervasive means it's affecting many other areas of the company, of the financial statements. Then it means we have a serious problem here. It's infected everything. Then we issue an adverse opinion. Obviously, adverse is worse than qualified, but I just want to make sure you're aware that there are two modified conclusion, qualified and adverse. Let's dive into the qualified a little bit more. When do we issue a qualified conclusion? Is when the misstatement is material but not pervasive to the financial statements. So the misstatement item affects a specific part of the financial statement but does not misrepresent the overall financial statement. So looking at this picture here, yes, there's a problem here, but this issue is limited to one particular face, not all six faces. Example would be a company failed to disclose a significant related party transaction. Yeah, that's a problem. That's a misstatement, but that's the only thing, and it does not affect anything else. But the rest of the financial statements are fairly presented. So except for that, everything else looks good. So if a qualified conclusion is issued, the review report must be modified to clearly explain the issue. Modification of the issue modification to the review report will put basis for qualified conclusion, because we have to explain why did we qualify this report. We're going to have the basis, explanation, and this is added before the paragraph, because if we're going to be saying that except for that, except for what? Tell us what we did. This section described the specific issue causing the modification. For example, if we're talking about the related party transaction specifically, it's a loan between the company and one of the major shareholders. Tell us exactly. It explains why the issue result in material misstatement. Then we have a qualified conclusion section. Qualified conclusion section, instead of stating no material modification, which will be unqualified or unmodified, the report state that except for the issue noted, no other material modification are required, except for. So when we're looking at qualified, you're looking for that word except for. Now let's take a look at the qualified report. The independent accountant review report, management responsibility, accountant responsibility is basically the same as unqualified conclusion. Then we have a basis for qualified conclusion. Then we explain why. In note X, the financial statements, these financial statements, accounting principle generally accepted in the US, that inventory cost consists of material, labor, and overhead. Management has informed us that the inventory of finished and work in process is stated in the company financial statement at material and labor only. Simply put, we're not including overhead. Okay, and this is a departure, but it's only for that issue. That's it. We only have one issue. Then we have a qualified conclusion based on our review, except for that, not including overhead and the inventory. Then everything else is good. We're not good. We're not aware of any material modification that should be made. And we have the signature, accountant, city and state, and date of the report. Let's take a look at this multiple choice question to see if we can answer it based on our understanding of reviews up to this point. The standard report issued by a CPA after reviewing the financial statement of a non-issuer in accordance with SARS should state that the CPA did what? So a report, what do you think it will include? Kind of close your eyes and read the statements. This should be in the report, yes or no. Starting with A. Would the report state, assess the accounting principle used and significant estimate? Do we assess those? We don't assess those. No, we don't. We don't assess those. Those are the management responsibilities. We're not auditing. We're not assessing anything. B, the CPA should state that the CPA has responsibility to update the CPA report for events and circumstances occurring after the report date. Absolutely not. We're not responsible for anything. We don't mention this in the report. C, is not aware of any material modification should be made to the financial statement. Is this a possibility? Yes. If you are giving a clean, unqualified conclusion, you might be giving this. Between A, B, and C, I'm going to keep C for now. D, believe that there will be usually the difference between the projected and actual. We're not dealing with projected. We're not dealing with actual when we are dealing with these reports. Therefore, now D does not make any sense because we're not dealing with projected and actual. Therefore, the answer is C. What should you do? Whether you are studying for your CPA exam or accounting student, Farhat lectures where you find additional MCQs, including previously released AI CPA questions with detailed solution, including additional MCQs for your auditing course, for your auditing class. The best investment you can make is invest in yourself. Good luck, study hard, and of course, stay safe.